Hong Kong at night. It's one of the world's most impressive skylines, and it's lit up thanks to liquefied natural gas imported from Qatar. The same fuel also powers Dubai and many cities in Japan, Russia and other countries. The tiny Gulf state has amassed a huge fortune selling natural gas, and its sovereign wealth fund has spent more than $300 billion to buy some of the world's most coveted properties. In London, this list includes the Olympic Village, Harrods department store, a fifth of the London Stock Exchange, and the financial hub Canary Wharf. After pumping nearly $40 billion into UK properties, Qatar's sovereign wealth fund shifted its focus to the United States. It's becoming one of the biggest investors in US office space and owns a 10% stake in the Empire State Building. The Qatar Investment Authority is also a partner in some of the world's leading companies. It's the largest shareholder in mining firm Glencore. Last year, it used that company to buy 1/5 of Russia's energy giant Rosneft. Qatar holds 20% stakes in London Heathrow and St. Petersburg airports, as well as 1/5 of the parent company of British Airways. It's the largest shareholder of Sainsbury's, Volkswagen, Ooredoo, and the Agricultural Bank of China. And the sports investment arm of its wealth fund owns football club Paris Saint-Germain. Qatar is investing in companies and properties to end its dependence on the export of fossil fuels. Now that the country is facing sanctions from its neighbors, its foreign holdings are also a welcome buffer between Qatar and economic turmoil. Mobin Nasir, TRT World.
Dominic Dudley is the editor of Gulf States News, and he joins us now live from London. Dominic, thank you so much for being with us. Look, Qatar is immensely wealthy. Surely they can ride out this storm?
Yeah, I think for now they shouldn't be worried too much. As you say, they've got an awful lot of wealth that they can fall back on. The biggest question for them really is how long the situation lasts for. As it stands at the moment, they can cope with the embargo, the imports that would come through from Saudi Arabia or the UAE. Well, they can find the other sources for those imports, whether it's food from Iran or Turkey and raw materials from elsewhere. That's not such a big problem. It may add time and cost to put new supply chains in place, but it's doable. And its biggest export, its most important export, liquefied natural gas, most of that goes to Asia, and those are countries that haven't taken part in any embargo. So for now, it's okay, but the big question is what happens down the line, because these situations, they don't tend to just stand still. There'll be a resolution or they'll tend to escalate. And if they do escalate and maybe sanctions are placed on Qatari businessmen, individuals or companies, then it becomes more serious and they'll have to take another look at it. But for now, it's not too serious for them. They can cope.
Dominic, I think you're right. The time factor is the crucial thing here. I mean, in 2014, that dispute went on for months. If it does continue for as long, could they have to sell some of those assets that we saw in Mobin's report earlier?
Well, they may want to think about doing that, but of course, a lot of those assets aren't particularly liquid. They're not very easy to sell. It would take a long time to do so. So the dispute in 2014 lasted about 9 months. That's not actually that long a time frame in which to try and sell what are substantial physical assets. Other shareholdings which they could reduce more easily, and that might bring in some money if needed. But they've got large cash resources, we think, that they could fall back on, so they won't need to rush to make any big sells. Of course, if they did try to sell in something of a rush or a panic even, then they're probably likely to get less money in return for those assets.
Dominic Dudley, Gulf States News in London, thank you so much for joining us.